Hey everyone, how's it going? It's Saturday, March 24th. Wanted to make a video in case there's any new people to the site and kind of wondering how you use this data. For longtime followers, it's not going to be, much new in here. Um, so I like to give out this data and let you decide how to use it. I don't really like recommending all these trades just because the investing world is so broad, from day traders to people only use options to only stocks. So I don't really like to give out recommendations. It's more I like to supply the data, supply the statistics. It's up to you on how you choose to use it. But going over the open interest, so it was the highest call open interest was 600. So Apple should be, 80% of the time closing below there. 80% of the time it should be closing above 580, and Apple closed right here at 596. So it, the odds worked again. And what here in the conference, I was at the Apple Summit last week, and here's a slide I showed. If the stock side of the market is in equilibrium, meaning an equal amount of buyers and sellers in Apple's at say 595, the stock will not be moving. Don't think about the options. So the stock will not be moving. Now bring in the options market. Well, Apple always has more calls, two times, four times as many calls trading on it than puts. So what that does is that brings in bias. That brings in buy side bias. When do people, start going heavy into weekly calls? On Monday they'll start opening them up. So that's why as long as the stock side of the market is in equilibrium, usually the routine will go Monday, Tuesday up, Wednesday can go up flat. Doesn't That's not the point, and then Thursday, Friday come down. So what happens is these people that opened up these 600 calls on Monday for $5, they're now worth $10. I'm going to go ahead and need to take my profits, and that will cause selling pressure. A lot of people don't. You'll see a lot of people buy these for $5, watch them go to 15, and watch them go to zero. People love watching their options go to zero for some reason. But what will happen? You'll get a handful of people that close out for a gain, and it causes that selling. Now let's see what actually happened. And so here's a 30-minute chart broken out in 2 days, Monday, Tuesday. And so you have Monday, Tuesday, Wednesday up, Thursday, Friday down. That same thing we were talking about. And what you have right here is what started it all. You have going into the close on Wednesday about 6,500 on the for volumes, about 6,500 contracts of 600 calls traded in the close. A majority of those are going to be closing out, causing this big candle here. And so just if you have like 3/4 of those closing out or so, that's like 2.5 million shares that need to be sold right this second. And that's why you will get these big drops down. As long as you know where this is coming from, it's not a big deal. You should have expected this every single day. This has to be coming someday. This has to be coming. If it didn't come here, it would have came here. If it didn't come here, it would have came here. But knowing this, it just relieves all the stress. I know why this happened. I don't care. It's not a big deal. And then we can work on profiting from it. But just knowing why that's happening. And somebody asked, I'll just kind of go over quickly. Like I said, I don't like to recommend much. But what I was personally doing was I was selling the 605 covered calls, and I was using the 600 area as this is just a comment on the weekly graph. I was using the 600 as a sell signal. So I sold these 605 covered calls into Monday close. Apple's right about 600. So I sold them for $8. With the shares that I use, some trading shares, I was happy to get rid of Apple for $613 because I sold this for $8. Or I was happy to take in $800 per contract. Either way, I'm more than happy. What did Apple do? Apple, it was a play on the odds. Apple closed right here. I took in $800 contract and went about my way. I lowered my cost basis by $8. And um, and then I was using this 600 as a sell signal. And what happened here, Apple opens up, so it can't hold that 600. And this is all just really short-term trading, just, scalping a few bucks. once again, Apple hits this 600. That's your sell signal. Take in a buck, 50 cents, whatever you want to do. Into the close, didn't play anything. Here, same thing. Make a few bucks. And right about here, when Apple hit 601.50, I took a loss. So I used that as a sell signal. I took a $1.50 trading loss because once that happens, Apple has a lot of strength. It obviously did. Here, I didn't do anything. I was just expecting it or just watching it. Either way, if Apple starts to break above it, I know Apple has tons of strength and it's going higher. I was a little leery, and it finally did break. So either way, the thing is, I stopped out here. I was not using this as a sell signal anymore because now it showed me Apple has strength. Obviously, it didn't, and it got knocked down like the options market said it would all week. I did not sell any puts this week. It would have been great to, should have. It was within the odds. The reason I didn't is because I stepped back from the market. There's too many just things that could have caused a mountain of selling. First of all, you had, all these 600 calls that, say they all closed down or say there's manipulation involved. It could have caused just a cascade of selling. So I didn't want to do anything with the put side. Another thing is you had iPad rumors just hitting hard, CNBC, recall, iPad running too hot, this and that. And so it's kind of when you start getting that is somebody doesn't really want this thing above 600 or wants it lower. And then on Tuesday, you had that 570 print real quick. Just all those things mixed in there, I just didn't want to play that side. You don't always have to play both sides. It's best just to pick one side, actually. And then obviously later in the week, but again, you had a 540 print. This goes way lower. You had a 540 print. So something was going on that you kind of just, I had a feeling like it's going to be closing under 600. Somebody does not want this under. And then, of course, closing out options in general will cause that. And then again on Friday, someone asked about a butterfly somewhere in here. Yeah, so a butterfly because I thought Apple was closed 598 or 600 on Thursday, and so I don't recommend any exact trades, but yeah, I bought a butterfly for $1.05 in Thursday's close. So where are we at? So Thursday close, yeah, right here at 600. So I thought we were gonna close right about 600, give or take a few bucks. So I bought a butterfly for $1.50, and a butterfly, you're gonna hit your max profit if Apple closes out 600 bucks exactly. And it opened up here, went up to 601, got knocked down from that open interest, and was right about 600. This is a 30-minute chart, remember. But what happened is you had that BATS error and the print to 540. And so if that wasn't there, I think Apple would have closed at right about 600. 597.50 plus a little bit in there. I think that freaked people out and kind of caused this little drift lower and lower and lower. That's just my take. So what I did on that one is not even in here. I ended up closing that one for like $1.80. So made a little profit, a little under 100%. But yeah, that's what I did for that. I was expecting a 600, but that's what's nice when you kind of somewhat have an idea where Apple's going to close. You can start to profit on it, and the options kind of give you a lot of cushion. So I bought it for $1.05. Even with all this happening, I closed it for $1.80. I was looking to close it out, for $4, $4.50. And yeah, so that is about it. But or just like that flash crash thing, it could have kept going. And then this week, I thought these puts would have held. Hey, stuff happens in the market. So, all right, have a good